I'm Jim Schultz, and welcome to the afternoon edition of Options Uncapped. Man, I hope you guys are doing well out there. Welcome to the Wednesday double feature edition of what it is that we were trying to do. So, we did the morning stream earlier today, and we somehow managed to keep the account above zero. So, that is a good thing. I hope you're doing well wherever you might be in your neck of the woods. Again, guys, you have one job and one job only. You have to pump that algo. You have to 100% get in that guy with questions, comments, stories, and jokes. Put it in there because I want to know, and the algo is dying to know. Now, if you saw this morning's stream, then you know that we had a little bit of an advertising bonanza, let's say. Again, I got the monetization on the channel turned on last night, so I'm super excited about that. But they went ahead and pre-selected all the ads, like across the board. And so between shows, it should be a much better experience for you guys during the show. Theoretically, you shouldn't get any ads during the show. There might be one or two before and like one or two after, but who cares about those? There shouldn't be any during the show. I turned on super chats. So a lot of people have reached out about, hey, how can I support the show? How can I support what you're doing and all those kinds of things? That's amazing. Super chats should be on. And so that's a way for you to kind of support what we're doing and support the channel, and you have your chat kind of highlighted in the stream. I have no idea how it works. I've never done this before, and so I am learning along with you guys. But if somebody wants to pop in like 50 cents or $1 or whatever, just to see if it works, it should be on. The super stickers should be on and all that kind of stuff, which is super cool. And I think that's a much better way, much better experience for you guys than having ads bombarded on you kind of, left, right, and center when the show is going on. So if you want to support the channel that way, that would be super, super amazing. So Ryan, go ahead and bring us into the market. Man, let us take a look. Okay, so we've got E-mini S&Ps. Let me grab my... it's a little early for Diet Strawberry. We'll bring that out in a couple of seconds. You can't be dropping haymakers in the first 2 minutes. You gotta save those guys. E-mini S&P is down 4.5. You've got the risk-free instrument. Man, I see an ad. I see another ad. They freaking got me. Look at that. Wait a minute, though. I may want to buy that. Hold on. No, I don't want that. But, man, I thought I turned them off, guys. Man, I thought I did. Apparently, I didn't. Okay, we're shutting this thing down. We're 100% shutting this thing down. Wow, we got our first super chat. We just got our first super chat. I think so. My man, Ash Finn, man, he just threw $5 into the pot. Man, Ash Finn, I appreciate you so very much. Man, look at that. I appreciate you so very much, my friend. And so, man, that is going to get me, that's going to get me a Candy Apple Gorilla Mind right there. Man, you are a good man. You are a good man indeed. So apparently it works. I don't know how it works. Ash, tell everybody how it works. I have no idea how it works. But when this is over, I'm nuking all the ads, man. I'm nuking, not on the pre-recorded videos, because everybody expects those. But on the live stream, I am going absolute nuke city on all these ads because I don't want any ads during the live show. Because what if I'm like putting on an EQT? Like what if I'm doing, look at Dracos with the super chat. Sorry guys, we'll get into the content, but this is brand new and this is like super, super awesome. Man, look at you guys, man. I appreciate you guys so very much. Man, this is super, super awesome. Wow, this is really, really great. I feel very, you guys are going to make me start crying. So you may want to shut down these super chats because once I start, man, I'm not going to stop. Like once the tears start flowing, it is OV. But I'm going to nuke these ads. Don't worry about it. Hopefully they should be taken care of by tomorrow. And so, all right, so we've got E-mini S&Ps down 4. We got the risk-free instrument about unched, up a couple of points. We got the boomers down 140. You got the Russell 3000 down 4. You got bonds about unched. You got notes about unched. You got oil. Oil's up a couple of ticks. You got UB40 down 5. You got gold down 37. The shifties out there getting smacked around a little bit. That's about where they were this morning, I think. You got the British pound. You got the euro. You got volatility futures. You got Bitcoin bros out there down $300. Yeah, get out there, man. Check on your local neighborhood Bitcoin bro. Down $300 today. Down to $78,000 though, man. I see you, Luminous Bit, coming in for another super chat. Man, I just appreciate you guys so very much. I'm excited about this, man. This is brand new, and this is really, really cool. And man, it's just gonna allow us to do a bunch of cool and fun things. And so that is awesome. And so yeah, but definitely check on your local hood neighborhood shifties. And so let's see. If I go to Man, look at Danish Dynamite is in here. Have a ghost on me. Man, I appreciate you. Guys, I'm going to be super distracted. If you're brand new to the show, like, we're learning as we go. Like, Ryan, give me back to the soapbox really quick. We're learning as we go, right? We're figuring this out as we go. And it is an absolute train wreck, right? The fact that they let me out of the tasty barriers, I don't know whoever thought that was a good idea. Because now, I mean, I'm getting a lot of people are reaching out. I'm getting a lot of emails, which is awesome. And, you know, it's just amazing. There's a lot of new people in the show. A lot of new people are like, hey, you know, this is good. This is great. But I really wish you would stay on topic a little bit more. Like, I really wish you wouldn't take every tangent that you saw. And it's like, I'm trying, man. Like, I'm trying. I mean, I'm not trying that hard, but I'm trying a little bit not to take every tangent that I see. Or Daniel, I see you in the house. Man, I appreciate you guys so very much. And so the super chats and the ads, we're figuring all this out, and the super chats are just so cool. And, wow, whoa, this is getting out of control, man. Hold on. So I see Org Daniel, wait. Dracos, I see Ashfin, I see Luminous Bit, Danish Dynamite. My man Logan Rank just came in with 4 BEUs. My man Logan Rank just dropped 4 BEUs in the chat. Now, it's a Wednesday, right? So Autumn already knew we were going to Bonefish, but she didn't think we were going tomorrow, and we are. She didn't think we were going on Friday, and we are. Like, she didn't think we were going to do a Saturday double feature, like a brunch and a dinner deal, and now we are. Logan Rank, man, I appreciate you so very much. I promise I will get to some finance here in a couple of minutes, but you guys are just, man, you're showing off now, man. You are 100% showing off. Wow, I appreciate you guys so very much. So very much. All right, so let's get down to business for at least a couple of seconds. But if you are brand new to the show, if you give me a little bit of time, I promise I will find my stride here in the next couple of weeks, and we'll get into a better situation here with the show, where it's not a total train wreck, you know, every single show. And so, all right, let's go ahead and let's see. So number one, I did want to bring up the fact that we got our EQT back right after the show was over. I think it was like almost exactly like a couple minutes after the show ended. Yeah, right there. So you can see 10-12. We got our EQT back, which is this guy right here. We got that guy back right there. And boom, that was it. This was the only trade we did this morning. You know, we did the pre-market guide that you guys saw get closed on the opening bell. And then at 9:43, we saw an opportunity to go short. And we didn't take too much heat. We took a little bit of heat, but it wasn't really anything super crazy. And so we were able to buy that guy back for 244. And then if you look at, like, if I bring up a chart, let me see here. If I bring up a chart of, let me see here. If I bring up, let me see. I'm really blown away by you guys, man. All you guys. I mean, Logan, man, that's crazy, dude. That's crazy stuff, man. And Dracos and Ashfin and Daniel, man. You know, a Luminous Bit. Drew, I appreciate you. Danish Dynamite's in the house. Man, that's crazy. You guys are too good to me, man. But if I go to the chart here, if I do, let's go to MNQ. Let's do MNQ. If I go to MNQ, so we did the trade earlier. Actually, hold on. Let me see. Can I do my, sometimes the active trader works and sometimes it doesn't work. And so hopefully it'll work. But, let's see here. Let's do, let's see. Let me get this active trader up. Man, Sam L coming in. Man, Sam L coming in with almost a full BEU. Man, $20. Sam L, that's crazy, man. That's crazy. You got to spend that on your girlfriend, man. Like, you got to take her out something nice. Which, of course, wouldn't be Bonefish, but, man, I appreciate you so much, Sam L. Sam L, part of the core position, man. You guys are too good to me, man. Way too good to me. So let's go ahead. Yeah, we're nuking these ads. Who needs ads? Forget the ads. You know, if you guys can support, great. If not, like, it's all good, man. It's all good. I mean, this is intended to be free. This is intended to be, you know, my gift to you all, essentially, and my wanting to continue to give back to you guys. Because I know what it's like when you're trying to learn the space. You want to get better at options. You want to get better at futures. And it's hard to find somebody that can kind of, you know, take you from theory to practice. Now, I don't necessarily know of a guy, but if you guys do know of a guy, please let me know, because we could really use somebody that could do that. But if I go ahead and let's see here. If I do my executions, so that should theoretically work. Let me bring up Okay, so theoretically, yeah, here we go. Okay, nice. Okay, so this was the trade that we did in the pre-market. This was getting it back on the opening bell. And then you can see we sold this guy in the morning stream. I didn't take very much heat, so it really wasn't that big of a deal. And then we got it back right after the show. So that was the EQT. I definitely want to bring us up to speed on that guy. And so that is the EQT situation from earlier this morning into the afternoon. And here we are. Now, in the afternoon, again, this is not really the time for EQTs, in my opinion. I mean, I will do some end-of-day plays, but those don't usually, I usually don't look at those until maybe 3 o'clock. And so one of the things that I've really, so here's a little nugget to get you guys a little bit excited about the future. So one of the things, and I don't know how I'm going to do this because the show ends at 2:45, but we'll find a way. We'll figure this out. So another thing I do like to do, sometimes I like to use SPX, or even you can use SPX, you can use ES futures. You can use MES. Doesn't really make as much sense because I want it to be a bigger product. Because what I like to do sometimes is here. I'll actually even use my let's call on the Diet Strawberry now. I think it's time. Let's go ahead and do it. So if we do, if I'm like end of day, so this is typically like 3 to 4. One of the things that I've been tinkering with. Now this is a purely directional play. There's not much strategy behind this. This is, hey, I'm just going to take a shot and see if it works. It's very similar to the Nvidia earnings trade that we're about to do here in a couple of minutes, right? And so if you've been like, hey, I'm not sure I'm in the right spot, it's been an entire week, and I haven't seen a single stack of cash get set ablaze, don't worry. It is 100%. It is 100% coming. And so end of day, usually from 3 to 4, this is when I may go into something like SPX. I may go into something like ES, where I'm kind of treating it like an earnings trade. I'm kind of treating it like an earnings play, where I will put the trade on using a deep in the money option, and I'll trade it going into the close that day. That's why SPX is really nice, because it's cash settled. ES is a little bit trickier because obviously if you carry it into 4 o'clock, you can get assigned, and now you've got the position that you have to unwind and all those kinds of things. And so SPX is usually going to be a better candidate here now that PDT is gone and we don't have to worry about PDT. I mean, at this account size, it's not typically something I worry about a ton, but still, it was in the back of my mind. And so thinking about this, it's an interesting way to take directional shots. And so I have to figure out a way. Maybe we'll do some special events or something where you guys will see me do this. It's a fun little way to take some shots. Kind of do like an earnings trade in an index. And so, wow, look at EP Boyd in the house. Man, EP Boyd, I appreciate you so very much. So very much. So EP Boyd using the super chat for its intended purpose, I think. So he actually has a question, so I'm going to answer it now. Doc, how often do you scalp spreads or flies to make them risk-free? If all goes well, legging. Right. Me and Claude AI coded up a scalper script that connects to toss, and it's working pretty well. Yeah, what could go wrong, right? You and Claude AI, what could go wrong? Okay. So when you have a butterfly, like a ratio spread or a broken wing butterfly, you can adjust those strategies to turn them into risk-free strategies. So if I have a ratio spread, like if I have a put ratio spread and the market rallies or the stock rallies, then I can buy back that quote-unquote missing put that completes the butterfly, and I do it such that I still have a net credit. And by doing that, I put myself in a situation where I can't possibly lose money. You can do the same thing with a broken wing butterfly. So I'm assuming that EP, this is kind of what you're talking about. So I don't do this that often because A, most of my quote-unquote scalping is kind of around these EQTs. And also B, I actually don't even typically take like a regular ratio spread or like a broken wing situation and turn it into, there's another ad. Man, they're getting nuked. Man, they're getting nuked like they've never been nuked before. That's unbelievable. That's unbelievable. Anyway. I don't typically fly them off to make them risk-free because I feel like you're giving up a lot when you do that, which might sound a little crazy because it's like, man, but now it's risk-free. I have no risk in the trade. I've taken all the risk off the table. That's obviously an incredibly sizable gimme. The gotcha is it does become difficult to make any economically significant profit on that trade. Now, I'm not saying I never do it. There might be times where, I'm putting on these put ratio spreads and I really just kind of want to build, a series of booby traps down below where the market is that can effectively serve as risk-free hedges. So if I want to do that, then that might be something I would consider from the standpoint of, creating these risk-free situations, but I don't typically scalp them. It's not something that I do on a regular basis. And so, but great question there, EP Boyd. I hope that answer kind of gave you a little bit to chew on there. So, okay, so let's go ahead. Let's see, it's 2:15, and I've got a ton of questions, like an incredible amount of questions, which is so awesome. And I want to try to get to as many as I can. And again, if you're new to the show, it is a train wreck, I know. But I hope you stick around, give it a chance, give me a couple of weeks to kind of find my sea legs here, and we'll do it. But let's do it, guys. Let's go into Nvidia. Oh. I glanced over at the chat, and I'm a surprised and delight Danish Dynamite. Does Dr. Jim accept Russian rubles? I most certainly do. Right? I will take whatever you got. I'll take Russian rubles. Right? I'll take Mexican pesos. I'll take monopoly money. Like, ship it, man. 100% ship it. We will take all forms of currency, both real and fake. And so Nvidia, here it is. Okay. Now listen, guys, we obviously, we've said this. I said this all morning. I'm going to say it here again today, right now. Never forget, I am not a financial professional. I do not know what I'm talking about. You should not listen to me. Right? Nothing I say is a trade recommendation. Nothing I say is financial advice. Nothing I say is anything that you should do in any type of official capacity. And so, should my trade and your trade happen to sync up and be similar in any type of way, it is pure happenstance. I am a faceless gnome wandering through the wilderness. You are a faceless gnome wandering through the wilderness. And our paths have just happened to cross by happenstance. And so keep that in mind. It's purely educational and maybe even a little bit of entertainment. But when I think about Nvidia, and I got all my chips in the middle, man. I think he's finally going to say it right tonight. I think about Nvidia, and I don't need a chart. I don't need a statement of cash flows. I don't need a 10K. I'm just going to use common sense, right? If I just apply common sense, and I just think about Nvidia as a philosophy, as more of like a way of life, I don't know how you could possibly be anything other than mega bullish on Nvidia. There's just no way. There's just no way. And by no way, I mean it's about 40-60. This is going to go in our favor. So when I'm looking at Nvidia for this front week cycle, I think it's time, guys. This is the first one. This is the first one. I think we're finally going to do it. It's going to be the expected move butterfly to the upside. So I made it a week. This was like a daily. This was a daily deal on FTTP, RIP. So if you happen to have any banana natty left, I would pour a little bit out for our fallen comrades from Tasty Bastille Day, but also FTTP, since that is now over and done with as well. But I kind of think we do the expected move butterfly, and I think that's just the way you do it, right? Again, I don't make the rules, man. I just feel like this is the way it's got to be done. You've got Nvidia up at 210, 211, right? So Nvidia is up at 210, 211. Okay, perfect. I'm kind of thinking, what if we did like a 212.5? Now, if you're listening to the audio-only version of the show and all you have is my sultry voice to carry you forward, let me try to help you to the best of my ability. I'm in the 2-day cycle. I'm looking at Nvidia, NVDA. It is selling for about 210, between 210 and 211. I'm looking at a call butterfly, looking to pin the expected move to the upside. And so 212.5, 225, so a little bit outside the expected move to the upside. The expected move to the upside goes up to about 222 or so. And so 212.5, 225, 237.5. And so this would be a 12.5 point wide butterfly. And I kind of think this might set up okay. So 212.5, 225, 237.5. And obviously we double up on the shorts, and there you go. It's a thing of beauty, right? $2.35. And if you smell something off in the distance, it is smoke. And it is this trade about to get filled. And so I really do like the risk return trade-off of the trade, though, because if it does work, should we happen to find ourselves in a situation where Nvidia actually does rally on earnings tonight, then this could be a nice little trade for us. This could be a nice little winner. Now, it was funny because I was thinking about Nvidia earnings going into, this week and like Wednesday and stuff. And I was like, man, like I really would like the account to get off to a decent start. Like, it's all out in the open. Like it's full transparency. It's like, I don't know, man. Are we going to be lighting some stacks of cash on fire? Like probably. But let me see how long I can hold out until we actually do. Well, thankfully, we've had some EQTs kind of work out around the edges to offer up a little bit of a buffer just in case this doesn't work. And so I am curious how you guys are playing Nvidia, though. Let me know in the chat because I want to know. And the algo is 100% dying to know how you guys are playing Nvidia earnings. So 212.5, 225, 237.5 for 234. And again, when I put on an expect to move butterfly, just to kind of finish a few additional thoughts on this. Number one, I really like, because again, we have a lot of new people that are finding the show, a lot of new people that have found the show, which is super awesome. Welcome aboard. Couple of things. With a butterfly, I really like doing them in the front week. I don't typically do too many butterflies that have like 30 days or 45 days or 60 days because, in fact, here, this is how you know we're serious. Let's go to the curve view. Can we do it? Yeah, look at that. Let's go to the curve view. Let's click on that guy. Let's do that. Oh, man, look at that. It's beautiful. Ah, man, it's so beautiful. Okay, so let's talk about this butterfly on Nvidia for a couple of seconds. So number one, it's important to understand that when you do a butterfly, right, if you are wrong on either side of the market, it's going to be a loser. If you miss the mark on either side of the market, it's going to be a loser. And so I like the expected move butterflies because you are directional. You're kind of using the objective measurement of the market itself to help you figure out what the likely move in the stock is going to be. Now, is that a guarantee? Of course not. Is there a certainty that that's the magnitude of the move that you're going to have? Of course not, right? But it does give us some kind of objective measurement of what a move in the stock might look like. And so I really like that. I like that a lot. And so when it comes to missing the mark on either side, that's going to be a loser. So I'm going to have to get somewhere inside this tent to make money. That's the first thing we want to understand. The second thing we want to understand is that with a butterfly, the only way to make economically significant profits on a strategy like this is to be close to expiration. Like if you do a 30-day or 45-day butterfly, like a regular butterfly. I'm not talking about broken wings and broken hearts and broken toes and all that stuff. I'm talking about a regular cookie cutter Betty Crocker recipe butterfly, like this one. Just a 1x2x1 where it's symmetric on both sides. If there's too much time left in the cycle, it's going to be very difficult to make money. Because the only way to make something economically significant on a butterfly is you are going to need to get close to the short strike and have it occur near expiration. So that is why for earnings, for binary events, things of that nature, I really like using that front week as my kind of exploration cycle when I'm thinking about a butterfly for a directional play. And so number one, understand if you miss the mark on either side, it's probably not going to work. Number two, a Wednesday going into Friday butterfly sets up really well for all the reasons I just went through. A Thursday going into Friday butterfly sets up really well for all the reasons that I just kind of went over. So Wednesday into Friday, it's one of the patented, it's one of the tried, tested, and true that the FTTP fam, you guys know about that. But even for the new people, like hopefully this gives you a couple of things to think about as you're starting to like think about and position for your own like earnings trades and binary events and things like that. And so I really, man, I kind of like the way this is setting up because we're only risking. Let me actually offer up a couple more thoughts around this butterfly. If you look at what we're risking to what we could potentially make, right? I'm risking 237 to potentially make over $1,000. Okay. If you are brand new, which again, there's so many of you now, like there's a lot of you. This is so cool. Like it's really, really, really fun for me. In a lot of ways, it kind of feels like the beginning of a new semester. Like going back to yesteryear when I was in the classroom and I was a finance professor, like every year. I mean, right around this time, end of August, this is when the semester would begin, right? And so it actually kind of has that back to school feel to it from a calendar standpoint too, which is cool. When it comes to a butterfly, you have to kind of remove from your mind the maximum profit as a feasible outcome. You're not going to hit it. Now, theoretically, yes, you could hit it, but are you going to hit it? No, you're not going to hit it, because you need to pin the short strike, and it needs to happen at expiration. And so you have to kind of hit both numbers on that combination lock. One is not enough. You got to hit them both. And so it's very difficult to do. So when I look at the maximum profit, I'm not really thinking about, okay, that's a feasible outcome. So that's kind of out of reach. However, I do want to be mindful of what is the ratio between maximum profit and maximum loss. And generally speaking, I really like to live probably somewhere around 4 to 1. Like 3.5 to 1, all the way up to maybe 5 to 1. Those are pretty good butterflies in my opinion, because the longer, or I should say the wider that distance between what you're paying and what you could potentially make, even if I can't hit the maximum profit as a feasible outcome, it just gives me more distance. It gives me more room to roam. It gives me just more opportunities to potentially make money on the strategy. And so that's how I'm thinking about this trade and how I'm thinking about this strategy. And maybe that gives you some ideas and some inspiration in your world. And so I think, man, let's just go ahead and put this guy on. Like, let's do it. And then I want to get to some of these questions because there's so many questions. And I just, man, this is really, really awesome. Like, I'm really digging it. Like, are you guys liking the 2-a-day streams? Like, are you guys digging it? Like, let me know. There's another freaking ad, man. Look at that. It's right there. Okay, that looks pretty good, too. I may check that out later. But, man, we got to nuke these ads because I can't do it, man. I can't do it. But how are you guys digging the twice-a-day streams? Like, let me know, like the morning and then the afternoon. Tomorrow, I'll just be with you guys in the afternoon. I'll be in the stealth stream in the morning, of course. But then Friday, we'll be back. We'll be back for the double feature. Let me put this guy on, and then we'll get to questions. Let's see. If we do... Oh, wait, that's not what I wanted to do. Yeah, let's do... 237. That looks okay. And so, let's see if we can get it filled. And I see, we'll do 238. There it is. Got filled at 238. Awesome. All right, so we are in Nvidia for earnings. Man, I'm pumped. Man, I am pumped. We're doing it. And that is $238 that just got blown to smithereens. Like, it is over. It's over. It is done with. And but that's the way it's got to be. That's the way it's got to be. One of these times we're gonna have a stream like during earnings, so we can actually kind of see how that guy goes. But okay, let's go to some questions. All right, so I see some questions. Let me go ahead and let's see. Let's get to the surprises and delights. Man, let's do it. I have not forgotten about the surprises and delights. Man, I still can't even get over it. Logan, man, I appreciate you so very much. I appreciate all you guys so very much. I mean, this is crazy stuff. Crazy stuff. But I see Sam L. What's going on there, Sam L? How do we capture IV collapse without burning a stack of cash before the BEU dinner? Yes, it can be tricky to do, right? Because, you know, when you sell premium, that puts you in a position to capture the implied volatility collapse, the implied volatility crush that is so reliable after earnings, because implied volatility gets bid up going into earnings. That's pretty reliable, like the 7 to 14 days going into earnings, implied volatility typically expands going into that. And then if you sell premium right before the number, similar to what we just did, I mean, we bought a butterfly, but that's still kind of a short premium strategy. And so if you are doing something that is short premium in nature, that implied volatility collapse, obviously, you're going to get it the next morning. Like, you're going to get it the next morning. You're going to be ready and prepped for a bonefish lunch. Not dinner. Not bang bang shrimp at 7 p.m. I'm talking bang bang shrimp at 11:30 a.m. Like, you are ready to go, man. Some banana natties at like 10:45 and then a bang bang shrimp at 11:30. Man, that's how you do it. But yeah, after the earnings number comes out, the following morning, the volatility it absolutely collapses in those options. Now, it doesn't fully collapse, like it doesn't fully crush on the open. It might take an extra day or two. And so another strategy that can be really, it can be somewhat lucrative in my opinion, and this is kind of a continuation off of your question. You know, we can do short premium strategies after the earnings event. So we actually sidestep the binary nature of earnings. So we don't necessarily have to contend with an explosive move on either side. But we're in a situation where, we can still take advantage of reasonably high implied volatility. And so that's kind of how I think about that Sam L. Let's see. We got some other ones. Let's see. There's Badger Dono. What is going on there, Badger Dono? I'm probably in the minority, but I'm going to use the sit on my hand strategy for trading Nvidia earnings. Too volatile and too many other opportunities less risky. I don't blame you. I don't blame you at all. And that's why like something like Nvidia or like AMD or like SanDisk or Micron, that's why I really think that, using some kind of strategy that's, defined risk in nature, and so you have your risk controlled. While I don't love defined risk trades, and you guys, I don't know that we've done this is the first one we've done, I think, in a week. Which defined risk trades are fine, but again, I've said this on the show. I've said this on From Theory to Practice for 10 years. 10 years. If you really want to try to build up consistency and, smoothness, and I'm always hesitant to use terms like predictability, but just in terms of like getting where you're trying to go in a more, I don't want to say predictable, but in a more reliable fashion. I think that's the best way to put it. I think undefined risk is going to be the thing that's going to get you there, which I know is super backwards, and I know it's super counterintuitive. Right? Like if you're brand new and you're just learning, you're like, that doesn't make any sense. Like, aren't you going to have to contend with like 3 standard deviation moves and 4 standard deviation moves and whatever? Yes, you are. Like, yes, you are, and that's going to happen. But again, when the dust settles and you sift through the rubble, I really still think you end up coming out ahead in the end, and the results end up being smoother. Because when you have undefined risk, you can adjust, you can manage a lot more effectively than you can with defined risk. And so I don't really love it. But again, for an earnings trade or a binary event or something of that nature, I mean, defined risk strategies can be really, really, really great. And I still use them around the edges as well. But let's see. Liren's in the house. What's going on there, Liren? Jim, can you say your experience on a 1-1x trade, like a 1-1-2 or something like that? A long put spread financed by a short put for a credit. Yes. So that's a ratio spread. So a 1-1-1 or a 1-1-2 or a 1-1-3 or whatever, that's just another version of a ratio spread, which is just a 1x2 or like a 2x3 or like a 3x5 or whatever. Like you can kind of slice and dice it a number of different ways. When I think about my favorite strategies, when I think about my favorite undefined risk strategies, without question, they are short put, short strangle, ratio spread. Those are the 3 amigos, right? Those are going to be the 3 musketeers, right? Those are going to be the perfect storm of what we are trying to do. It's going to be George Clooney, Mark Wahlberg, and that other guy. So short puts, short strangles, and ratio spreads are what I really love to lean on when it comes to my undefined risk strategies. And so I'm going to be doing a lot of those. A 1-1x trade, 1-1-1, 1-1-2, 1-1-3, 1-2-3, like however you want to slice it up. It's just going to be a version of a ratio spread. I love it. I love it a lot because you can do so much with that extra put. Like you can toggle it around and move it around to kind of adjust, the credit that you might collect or, your risk parameters on the trade. It's incredibly flexible, and you can use it offensively. You can also use it defensively. So I really feel like there's a lot of things you can do there. And so I really, really like it a lot. Let's see. There's Danny Perkins in the house. I'm thinking of a put calendar in the video for tonight. Well, that would mean you're on the opposite side of me. And so if history is any guide, I think you might do okay. Good luck to you, my friend. Denu is here. Doc, for today, there was Nvidia, CRM, and crowd earnings. Any thoughts? Well, we already did Nvidia. And then we've got CRM and CrowdStrike. Man, are we trading Salesforce.com? CrowdStrike, that's a Griffin Jones. That's a Griffin Jones stock right there. Man, CrowdStrike. Salesforce.com. I think I'm going to pass. On both of these only because, again, we're getting our feet wet with the binary trades. We're getting our feet wet with the expected move butterflies. I want to be somewhat mindful of how much cash we are burning to kind of, keep the place warm and cozy. You got to burn a little bit, of course, but I kind of want to see how Nvidia does first. But good luck to you, my friend, if you do anything. And then E-Media, are you doing BBY trade? Earnings tomorrow morning. Best Buy. Whew, man. Best Buy, yeah. Wow, I love Best Buy, man. I mean, me and the Geek Squad, we go way back. I mean, I think I've been a member for like 2, maybe 4 weeks now. But Best Buy is in the morning. Yeah, I don't know, man. I think I'm going to pass for now. I'm going to pass just because, for a couple of reasons. Number one, I just did Nvidia. Number two, I'm trying to be mindful of kind of where I'm at in space when it comes to the portfolio. But then number three, also, when I look at my theta numbers, I'm pretty happy with where those are. Like, I don't really want to jump out of my slides to build those up even more right now because I kind of like the fact that it's on the lower end of the range. You know, the VIX is pretty low. There's not a whole lot of stuff going on. I mean, it's August going into September. Historically, seasonally, this is a higher volatility time in the market, generally speaking. And so if if history is any guide, then it's like, well, I'm going to have a lot of capital ready to go. I don't want to get caught in the quagmire that is Best Buy like we did before way back in the day. And so we're just kind of getting our feet wet and having the morning stream and the afternoon stream and all the different things that are going on. So I'm going to pass on Best Buy too. I mean, these aren't even the heavy hitters. I mean, Nvidia is obviously a heavy hitter, but it's like Best Buy and, you know, Salesforce.com and CrowdStrike. I think I'm gonna pass. Let's see. My man Dracos is in the house. What is going on there, Dracos? Again, I appreciate the super chat earlier very, very much, my friend. Very, very much. Dr. Jim, can you validate or correct me on DTE as it relates to an EQT? Smash and grab makes me think 0 DTE. Then my brain moves on. But does it follow the standard 45 to 21 rule you preached in the crash course? Great question. Excellent question. Okay, so it is a smash and grab strategy, right? The idea behind the EQT, it's intended to be super short-term in nature. Again, as you have seen, a lot of times they're minutes. And I really like that because it's so different from the other things we're doing, right? Again, you've got your longer term bucket. You've got your options bucket. Now you've got your smash and grab bucket, right? And I really like that because it's like long term, medium term, you know, milliseconds, right? Like that's kind of like how it kind of sets up. But again, they're all intended to work together, right? It's none of them is intended to go off on its own. I mean, the only one that could go off on its own, I think, and be really, really successful would probably be, well, I don't know. I was going to say the long-term buy and hold because that's just been so successful for centuries now, right? I mean, they were knocking these out. I mean, they were buying index funds in first century Judea. Like they were like, man, we should probably just dollar cost average because if we do this, our kids, grandkids are going to have like, you know, $300-400. Because back then, like a penny went a pretty long way. Like a drachma took you pretty far. And so they didn't really have to think too far into the future. But when you think about buying and holding and long-term investing, it's obviously, I mean, it's a great trade and there's no reason not to do it to some degree. But then it's like, I don't know, man, active options, I think, is maybe slightly ahead in my opinion. But either way, it doesn't matter. The way I'm setting it up, Dracos, is I want all three of them to work together. I want all three of them to complement one another. That way, I'm trying to build something to where I don't have as many holes, right? You have to take risk somewhere. Nothing is risk-free. We joke about the NASDAQ and whatever, but it's like nothing is risk-free. You have to take risk somewhere. And I really like kind of what we're constructing and what we're building here. But when it comes to the EQT specifically, I'm not thinking about 45. I'm not thinking about 21. I'm not even thinking about 0 DT. I actually tried that. So in the earlier iterations, because again, I mean, I've been building this for like 5, almost 6 years now. I mean, it's out in the open now. It's still being built. But I mean, these ideas started popping into my head probably around the time that we moved down to Florida. And so I'm going to say it's about 6 years. I mean, that would be the middle of 2020. And in the beginning, you know, I was testing and trialing so many different things. And I was testing and trialing things on small accounts, large accounts, medium accounts. Like I wanted to run the gamut and really put this stuff through the ringer. And one of the things I actually started doing, Dracos, was doing this around like a 0 DTE framework. Like you're in a 0 DTE framework where, you know, I'm trying to take advantage of, you know, time and volatility and all the different things. But what I actually found was it's too limiting. It's too limiting. There are too many barriers and there's too many limitations that are on that because there will be many times when you guys will see an EQT, I want to hold it through the close because it hasn't necessarily gone where I want it to go and I'm not ready to take it off yet either. So I'm kind of caught in that middle ground, which does happen on a fairly regular basis. And if I was in a 0 DTE world, that would be a full loser. Like if I was in a 0 DTE world, I'd have to make that decision before the close. And so I don't typically do that with the EQTs now. I want to give them essentially an indefinite amount of time to get where they're trying to go. And where they're trying to go could work out for me. Where they're trying to go could not work out for me. You know, whatever it's going to be. But I don't really want there to be an expiration date. And so that's why the futures make more sense than options. Now, some people have asked, a lot of people have emailed and, direct messaged, and people come and buy the property saying, well, Jim, can I just use stock instead of using futures? You could, but I don't like using stock because it's really expensive from a buying power standpoint. So I really want the buying power savings because, I've got a fairly modest account here, $54,000. It's not a little amount of money, but it's not multiple six figures or anything like that either. We're kind of right there, kind of in the middle. And so I really want there to be lots of buying power savings on whatever I'm going to do. And so hopefully that helps you there, Dracos. Let me see if I can find, man, there's like so many questions. There's too many questions. Look at this, man. There's too many questions. Wow. So hold on. Because you guys can help me out with this one. So Average Investor says, what is a banana natty? Okay. Can you guys explain to Average Investor what a banana natty is? So that way I can kind of utilize my resources to do another question. Because I know you guys can do it. Let's see. I see Rose is in the house. Says, Dr. Jim, where can I see what trades you have on? Well, following the streams is the best way to do it now. We don't have a follow feed. Like, you're not going to see me on Tasty or anything like that. And so just following the streams is the best way to do that, Rose, which I know and I understand you can't always do that and that's difficult to do, but that's the best solution we have now. Again, in the spirit of full transparency, I am showing everything. Nothing is hidden. It's all out in the open. And so if you do follow the streams, you will see everything that I've done. And so that's the only solution that we have right now, Rose. Hopefully that's okay. Let me see. I see, man, there's too many. There's too many good questions, man. There's just too many. I see my man away from the numbers. My man, Neil. What is going on there, Neil? What is up? Hey, Dr. J, just back from the commute, so I'm watching live. Man, I appreciate you. Any thoughts on ZB or ZN? Welcome, thanks. Less of the faceless gnome. I'm a fish, face blue smiling. No, technically, officially, I'm a faceless gnome. You are a faceless gnome. Like, I don't exist. I don't exist. We never met, and that is where we're going to leave that. But to continue with your question, I actually really like trading ZB. I don't trade ZN as often, but I think ZN might be more liquid than ZB. I like to trade ZB straight as an EQT candidate. I really like it because it's a mini contract. Or it's not even a mini. I think ZB is just like ZB. It doesn't really have a unit. It's not like a percent or like a dollar. It's just like a number. It's like pi. Right? It doesn't even have a unit attached to it, which is pretty cool. And so I like ZB because you can really stretch the commissions really far. Like when you're doing the micros, the commissions can really add up, man. Like they 100% can, and we have to be mindful of that. But with ZB at $31.25 per tick, it's like, man, you get 6, 7, 8, 9, 10 ticks on an EQT. That's a really nice trade. And bang for the buck when it comes to the actual commissions you had to pay. It's really, really nice. And I'll do options on ZB too. And so, obviously having an EQT trade and then having options that are available against it, I think can be really, really, really nice. And so, yes, I really like that there away from the numbers. But let's see, Kate. I see Kate C. or Cat C. I've been doing naked puts at the open on the day after a stock has a price drop, but where I feel the earnings and guidance is mildly bullish the night before. Please tell me your thoughts on this strategy. Well, that's very similar to kind of what I said earlier there, Kate C. I hope I'm saying that right. But yeah, I do really like the post earnings, right? Post earnings, you get whatever the move is. You're bullish or bearish. You can actually justify what you're suggesting on either side of the market, in my opinion. So you could sell a put if it's down and you think it's, it's overdone. You could sell a call if it's up and you think it's overdone or whatever. I think the put side probably makes more sense because of positive drift and the upward trajectory and things like that, and growth and innovation, and obviously, Cousin Kev's printing press and all those kinds of things. And so I really like that strategy as kind of a post-earnings strategy. So that is some really, really good stuff. Let's see. Let me try to get to... I'm going to get to one more question. It just snuck in at the end. This is such a good question. So let's see. Yuri says, Jim, for IRA traders, does it make sense to go to 100% with capital being deployed given everything is defined risk? Tom and Tony say 100% in an IRA is fine. Well, just as a general rule, I would get in the habit of fading whatever Tom and Tony say, just as a general rule. However, I think they are spot on right here. because in an IRA, you're not going to get any margin relief. Now, you can in the futures options, which I actually did a video on that. It's on the YouTube channel. You guys can check that guy out. But because you're not getting the margin relief that you would in a margin account, it becomes a lot more challenging to actually manage your buying power in a way that you like what you can do in a margin account. So because of that, it's not that uncommon to be at 60, 70, 80, 90% allocated in an IRA. And I'm going to go one step further. I don't think you have to be all defined risk necessarily. I think just because of the type of the account that you're in, you have to be mindful of the fact that you're not getting any buying power savings. Like you're either cash secured on the puts that you sell in equity options, or you're buying junky puts to kind of limit that buying power. And so either way, it can just be a lot less favorable than what you have in a margin account. So I totally agree. I think, most margin traders like to live, 25 to 50%. I actually think going higher than that makes sense too, to be honest with you. And so, but in an IRA, I definitely think going higher than that makes a ton of sense. A ton of sense. And so, wow, we're out of time. I can't believe it, man. Wow, you guys came out today. I didn't get to all the questions. If I missed it, man, come back tomorrow afternoon. Let me know what you got for me. Good luck on whatever you're going to do in Nvidia. That's what I meant to say. I really appreciate you guys on the super chats. Man, that's just crazy, crazy stuff. I'm super excited. I can't wait to be back tomorrow. If I can ever help you guys, just reach out to me, man. Reach out to me. I'm Jim at optionsuncapped.com, or we can connect on Twitter. I'm at optionsuncapped, or I'm at jschultzf3. Either one of those guys, you will find me. And in the meantime, guys, trade them small, train them heavy, and stay generous. I'll see you guys tomorrow.